Hello everyone. Today we will discuss about the one of the important question of objectives of investment funds. The objectives of investment funds, the a scheme can also be classified into a growth fund, income fund, or balanced fund, considering its investment objectives. Such schemes may be open-ended or close-ended schemes as described earlier. Such schemes may be classified in mainly as follows. In first one, growth and equity oriented scheme. The aim of in growth funds is to provide a capital appreciation over the medium or long term. Such schemes normally invest in major part of their corpus in equities. Such funds have comparatively high risk. This scheme provides in different options to the investors like dividend options in capital appreciation, etc. So now growth and equity oriented scheme that can be in using a long-term scheme. Such schemes normally invest in major part of the equity shares, and also it can be in higher risk. And these schemes provide the in different options like dividend options and capital appreciation, etc. And the investors may choose an option depending on their preferences. So it is also in growth and equity oriented scheme. In next one, income and debt oriented scheme. The aim of income funds is to be provide in regular and steady income to investors. This scheme generally invest in fixed income securities such as bonds, corporate debentures, government securities, and many market instruments. Now, income and debt instruments అనేటివి ఏంటంటే it can be fixed to the income securities such as in bonds. So it can be in fixed bonds కానీ in corporate debentures కానీ in government securities కానీ and also money market instruments. Such funds are less risk as compared to the growth and equity funds తో comparison చేస్తే it can be in a low risk or less risk as in compared to the in equity shares schemes. These funds are not affected in because the inflation in equity market. So this is the in income or debt oriented schemes. In next one, balanced fund. The aim of in balanced funds is to provide both in growth or regular income such as schemes. So balanced funds అనేటివి it can be in both growth and income funds అయితే ఏవైతే ఉండడం జరుగుతుందో సో both in equity and fixed income securities in the proportion indicates in their offer documents. These are appropriate for the investors looking moderate in growth. Generally invest in 40 to 60% in equity and debt instruments. Now balanced funds it can be investing them to 40 to 60% in equity and debt instruments that can be in invest. These funds are also affected in because the fluctuations in share prices in the stock market. Now in balanced funds it can be fluctuated to the some share prices and stock market. Now it is also in balanced funds. In next one, money market or liquid funds. These funds are also income funds. So this is also income related funds and their aim is to provide easy liquidity. Preservations of in capital and moderate income. These schemes invest in exclusively in safer in short-term instruments such as treasury bills, certificates of deposits, in commercial papers, and interbank, call money, government securities, etc. So money market also in liquid funds and it can be in less risk funds. It can be in a short-term instruments also, such as in treasury bills also, call money market, commercial papers, and security of deposits that can be included to the in money market funds. In next one, index funds. In last one, index funds. Index funds replicate the portfolio of a particular index, such as Bombay Stock Exchange, National Stock Exchange, etc. These schemes invest in these securities the same weighted comprising of an index. These are also in exchange traded index funds launched by the mutual funds which are traded on stock exchanges. Thanks for watching. This is also in very important.